This conference will now be recorded.
Good morning, everyone. Almost good afternoon. Thank you for joining me for this live trading session. Just wanted to talk about the markets for a second and go over a few trades that's in that small demonstration account that I've been showing here recently. So the market is close to its lows on the day, and we have a Saturday, and we have a weekend coming. So it looks like we might take some risks off the board, but I think all the information is basically out there. We know that we're going to have some um, some horrible job numbers. We know we're going to have we're going to be shut down for the most part for the rest of this April, and that those shutdown measures might even increase. We might they might start shutting grocery stores perhaps for a period of time so we can get people off the streets. If you've been driving around or if you've been out and about in your neighborhoods or driving into other areas, it's still a lot of people out, especially here in Houston. So maybe the grocery stores are still packed for the most part. The Home Depot is packed, places like that. Maybe the virus is going to continue to be spread. I'm hoping not. I'm looking forward to the market going up, believe it or not, and I'm looking forward to us getting the economy going again because it's going to be painful if we don't. But it's always opportunity out there if you trade in the markets, and let's look at some of that now. So I was looking at the ES because I have some small positions on in this account right now. Last time we looked at this a few days ago, I put this trade on here, and then I hedged it with this. So in that small period of time, at one point today, this was up over 50% in just a few days because obviously oil has shot up quite a bit. It was up over 24% yesterday, and today it is up another. At one point, it was up 7%. So I'm looking to offset that short put spread that I sold on oil and actually sell a call spread on this now since it popped up so much. And I don't believe we're going to go back up quite a bit in the near future. We would need a war to happen, and it still wouldn't jump up too much, I don't think, based on how much supply is out there. And so I was looking at selling the 51 and buying the 52 and a half, and that is going to give me only $50 before fees and commissions. But when I look at this spread over here, this was only a one. This was only a 1 point spread, right? This is going to be a 1.5 here. So let's see what we can if we can get filled on this. And the buying power is uh, somewhat insignificant here. So let's see. And if I don't get filled, I will change this and actually get a little closer to try to get some capital. We're going to let that sit for a second. Also wanted to look at the ES. I have a call spread on the ES that is basically worth zero. This is it here. It's at almost 90%. And so I'm going to put this in to close and let's see if it closes. But until then, I'm also going to put on the put side, believe it or not. I think this is a good trade within the next 42 days, not to stay in the trade, but let's just say I started off with this furthest 5 delta, and I'm going to not do a 100-point wide. This is risk mode, so I'm going to do a 50-point wide, and then might even bring that in as well. So this is going to give me $100, $112 before fees and commissions. And the buying power effect is going to be just under $300. So I actually like this trade. If we do the math, how far this is from at the money, this is the 1730 minus where it's currently trading at, the 2467 divided by 2467. All right, so that's about 30% down. All right, so it has to go back down another 30%. Not that it can't do that. I'm just betting that it won't. within this time frame, and I will be able to get out of this with a win. So I'm going to send this trade, and I'm going to try to get filled, and then I'm going to hedge it because that's what we should be doing. So I'm going to cancel this one here, and I'm going to actually move this one up a little bit. We're going to get a little bit more aggressive on the oil call, and let's do that. So we got the 51 days. So what I'm going to do now, I talk about selling between the 10 and the 15 delta sometime in course 3. Some of you have already been going over that. I'm going to actually sell a little higher this time. So that's the 60s, that's the 50s there, and then, all right, so let's look at, before I was looking at the 51, let's look at the 50, 51 and a half, see what that gives me. So it's about an 80. I'm going to go to the 49. That's going to give me about 60 cents. Let's go to the 9. That's going to give me another 60. That was fluctuating from 6 to 8. Let's try this here. No. All right, so let's go back down and go to the 49. And it's going to try to get 60 there. If I don't get 60, I'll be okay with getting doing it for 5. All right, so I'm going to go to this 49, 50 and a half. We're going to put in it at 60, at 6. We're going to try to get filled, receiving at least $51 and no cigar. I'm going to adjust this here and bring it down 5 cents here and see if we can get filled. All right, so we got filled in the ES, and now what I'm going to do is hedge the ES, and we received a little over $100. I'm going to use 30% of that. So let's just say we received $100. I'm going to use about $30 to hedge, and we're going to go to the same amount of time. It's about 42 days, and we're going to buy a hedge at the 30 delta. So I can buy a put spread that will cost me about $26, $27, and it's going to hedge me to about $73, $74. That's the max hedge I can get on that. Or I can try a butterfly and do something like this. This is a butterfly, and this right here is 1. It's a broken wing butterfly. This is 2, and then this is 1 again. So, and this is going to hedge me if it goes all the way through this. If it expires below this 226, I will still make at least $100 because I'm going to make 200 from here to here, and then I'll lose 100 from here to here. So on this one, I'm going to be hedged up to $200 after fees and commissions. I mean, before fees and commissions. So in this case, this is going to cost us about $26, $25. I'm going to put this in at 26 to hedge, and we just got filled in that CL because it jumped up. All right, it jumped up. All right, so perfect. Now let's try to get filled in this for this hedge, and that is working. So it jumped up. I'm probably going to get filled at the $27 range, and that's going to be about $31.60. I'm okay with doing that. I received a little over 100. Let's let that play, and come on. That's jumping around quite a bit, so I'm gonna let that sit. Let's see, just for demonstration purposes, I might force this to get filled, or I'm gonna change it and bring it down 1 if I don't get filled at 28. All right, so they're not filling me at 28, which is bummer. A little longer here. So, all right, so don't have a lot of time to be looking at that. So we're going to cancel that and then go back, and we're going to bring it down a little bit. So that was what we just looked at, was canceled, and that was we were buying the 29 strike. So all right, so now we're going to buy the 228 strike. Buy that and then 2 points lower, we're going to sell buy. We're going to highlight this one, the 226, and we're going to put 2 there to sell it. And we're going to bring this up to 27, and we're going to see if we can get filled really quickly. All right, so that is still working. They're robbing me today. All right, so let's try one more time. And the 228 is not getting filled at the 28. All right, so we're going to cancel that one more time. We're going to move this down to the 27. It's still around that 30 delta. And we're going to put 2 here again. Look at how that's jumping around. There we go. All right, so we got filled there. We go back to these positions here and we look at this. And this is the trade here. So we're going to try to get, obviously, we hedged ourselves here. We put another call on here, and we put the put side on the ES. All right, so let me open it up for any questions. If you have some questions, please unmute your mic and ask those questions, please. All right, so if we don't have any questions, I'm going to, this video is recorded. I'm going to send it out. It's going to be put on the YouTube channel. If you haven't subscribed to our YouTube channel yet, please do. But if you have some questions afterwards, please call me, text me, or email me, and we will try to do this at least twice a week. And we'll build the portfolio, and we'll take off things, put on things, hedge, adjust, all of those kind of things. And then if you have something in your account you want to do on this as well, we can. If you need some help, we'll use these live recordings to be able to do that.
Hey, O'Brien, can you hear me?
Yes, I can.
I have a question. I asked you the other day in the other session, but I wasn't able to see your answer, if you addressed it. So with this hedge, at what percent profit would you be looking to take off from ES? Because like usually we're like aiming for like 50 to 75% profit, but if we're eating into the profit with a hedge, does that change that?
Good question. So no, it doesn't change it. You still want to take off at 75%. So for example, for example, this right here is the SPY, which is the ETF equivalent to the ES, which is the S&P 500. They're both the S&P 500. One is we put this hedge on at basically around the 30 delta, and this one the 28 delta, right? And the only reason I put it on the 28 because volatility is so high, the put side is expensive, right? And I wanted to put this butterfly on without putting more on. But if we get a volatility decrease, or as time gets closer to expiration, this right here is going to hold its value a lot more than that put spread that we have way down at the 5 delta. So when that's at 75, let's say I take 75 out of that, this is still going to be worth something. This could still be worth $8, $10, $5. It's still going to be worth something. So this is not going to be zero usually. But even if it was zero, you're still going to make a profit. Obviously not as much as you want because of this hedge. But in this environment, you want to hedge, and you want to keep that hedge on like we normally do until we take off that short position. So does that answer your question?
Yes. And then I know you explained, but I think I missed. How did you decide on doing the 30 delta hedge? Like, what delta hedge at?
Okay, so that's a good question. So I decided that, and I'm doing this over a number of years, because if you hedge something at the money, let's say we decided we hedge it at the money, and let's say we did the normal type of 1 point put spread, it's going to cost a lot more if you're doing something at the money. If we do the butterfly, as you notice, the closer to at the money, the more it's going to cost. So I wanted to be able to come up with a hedge that hedges you well, but you still have you're not using that much capital to do it. So if you hedge at the 30 delta, that means it has a 60% chance to touch, right? So this is a pretty good hedge because probability of touch is 2 times delta. So if your delta is 2, your probability of touching is 6. Excuse me, if your delta is 30, your probability of touching is 60. So in this case, this is a good hedge because 30% of the time, or 3 out of 10 times, you're going to make money on this hedge as long and you're going to make money on your spread. Obviously, it's going to be some times where you're going to make money on the spread on the hedge and you're going to lose on your position. That obviously has happened to a number of us in the last 30 to 40 days. But in this case, volatility is so high, I'm getting 30% away on that put spread that I sold right now, and then I'm buying this hedge at the 30, at around the 30 delta. So that it was just an arbitrary type of decision years ago, just practicing which delta is the best hedge at, and that 30 delta, through my personal research, is the best delta to hedge at, around that 30 delta, because it's only going to cost you 20 to 30% of what you sell. And if you sell something and you're trying to get something $100, normally I'm trying to get $100 when I'm selling something. In an environment like this, if I wanted to take off risks in a smaller account, then I'm okay for getting at least $50. So you always want to get at least $50 to be able to put the risks on the table and so forth. So that's where I come up with the 30. All right. So any other questions? And please don't be shy. This is important that you learn this and understand why I was doing certain things. But if we don't have anything else, I appreciate everyone joining once again. This will be recorded and added to our YouTube channel. If you haven't subscribed, please do so. And we will do this again at least twice next week. Try to have a great rest of your day. I will check in with everyone a little later. Thank you.